Estate, your source for all things mortgage and real estate related. The show that brings you all the hottest topics and insights directly from those who know it most. Now sit back and enjoy the show.
What's up, everyone? Paul Apostolakis, Brad Weisger. We even have Chad Reilly in the house. This is the whole Omega crew. Today's actually a very, very special episode. It is, and I didn't announce Sal as a host because Salvatore Cusmano
is our guest.
Is actually is the guest.
He's
our guest. So, Sal, just to give everybody some background, Salvatore is literally one of the best loan officers in the country. Not because I think so, only because I do think so, because he's really, really good. But his numbers actually speak to it. Yeah. He's ranked top 100 in the country. He's won multiple awards. He's top 10 in the state. He's closed over $3 million in volume over the last 2 months.
He's closed almost $4 million this month.
Yeah, that's what I'm saying. I mean, he is a top tier loan officer. We really couldn't do what we do without him because he is a wealth of knowledge. More so than anything, he just knows his stuff at a really high level. As much as I think I know my stuff, this kid just eclipsed me, and I've been in it for much longer than him. So, I'm really excited to have you on, Sal. How are you?
Thanks. I don't know if you guys have ever said anything so nice.
Yeah. Oh, yeah. There you go.
That's just how we kick it off.
Yeah.
Yeah. It'll get dirtier. Just to frame the show today we're actually going to talk mortgages. We don't spend a lot of time talking specifically about mortgages because we don't. We're more a real estate show. We deal with a lot of real estate agents, so we try to highlight our agents and the market really as a whole. But with the market with where it's at right now, something interesting has happened. Rates have gone down dramatically. I mean, we're locking people in at 4%, 3.99. We're back to really, really low rates. And I think it's a very poignant time going into the spring that we should be talking about how to structure your mortgage correctly more than anything, because it's a big part of what you're doing. I will say that I'm usually right about what's going to happen in the market. This is one instance where I was wrong. I did not expect rates to be this low. I did not expect it. I don't think anybody in the market expected this to happen right now. Right?
No,
So,
I don't think anyone could have foreseen that. A few months ago, it's like, hey, man,
we're going to
now's
6.
the time to buy. Now's the time to buy. Get in while it's low. And then rates dropped half a point, right?
Crazy.
And they're probably like, man, I make a mistake. But
no, you still got a good deal. It's just right now it's crazy. It's stupid.
And you can
low.
refi.
And you can refi. And we're going to talk about that. So, yeah, I mean, what I think is going to happen this spring, I already thought the spring market was going to be hot just due to what was happening in the market. And I did a thing yesterday on this. We are basically pouring lighter fluid and gasoline on an already hot market with rates where they're at. People that weren't going to move because they didn't want to lose their low rate. Let's say they were at 3.8 or 3.5 or 4%. Why would I move? Now they're like, well, I can move now. It doesn't matter. I'm not going to lose that rate. It just entices people to make moves right now. It was as cheap as money is. So what I want to get into is I want to get into 3 different things. I want to talk about if you're a new buyer, what to look out for. If you had purchased a house 6 months ago, 8 months ago, how and what to do about getting a refinance. And then I also want to talk about what we foresee going forward. So, Sal, the show is yours. So we're going to start with, right now we're seeing a lot of refinances, a ton of them. And we're reaching out to a lot of our past clients. We're really mostly a purchase transaction business. But within that, we've fallen into a situation where someone that locked in at 4.6 or 4.8, 6, 7, 8 months ago, now it's like, well, we can give you 4.25 and do it at no cost. So we're reaching out to a lot of people. So kind of talk to the audience. How do you structure? Because it only makes sense if we can do it at no cost a lot of times.
Right.
So talk to the audience how you're structuring these deals right now.
Well, the reality is there are costs, right?
Always costs.
There's costs, and the more as a client you pay out of your own pocket for those costs, the lower rate you can get, right? So let's say rates were 5% and now they're 4%. Okay.
Right.
4 being if you pay all the own costs out of your pocket. Mm-hmm. Well, if you're at 5, you could drop down to, let's say, 4.25, and we'll pay your costs.
We'll cover all your costs.
Yeah, we'll cover your costs because there's more credit from the lenders essentially that we get that we can pass on.
Also, just so everybody knows, on these loans, because we're a lender, we carry our own funds, right? And you always remind me of this, Brad, because you hate just saying that we're a broker.
We get better pricing and more credits on the secondary market from back-end investors.
And we're allowed to pass on in what a broker would necessarily have to pocket, right? We can pass that on to the client to make the deal worth it.
Exactly.
Let me explain that. So as a broker, you are required to make X amount on your compensation. As a lender, you can create smaller margins to make deals work where we're okay making less because, hey, we're doing the loan for free. It's all easy. We've done it before. A lot of times right now, by the way, we're getting a lot of PIWs, right, which are property inspection waivers. We don't even have to do an appraisal.
Right.
These things are closing in like 5-10 days, right?
That's pretty nuts.
Yeah. How's it going, man?
I'm pretty good down here.
Yeah, all right. Okay. So,
I like that.
yeah. So like, but here's another trick, right?
Yeah.
Because there are some costs. There's per diem costs, and a lot of times, let's say you owe $100,000 on your deal, your new loan might be 101 or 102, or you might bring a payment to closing. But explain why that makes sense.
Well, again, it just really depends on what you're looking at and the rate that you can get by bringing a little bit of cost, right? Like, let's say, hey, I want to bring 0 to the table. Okay, we can cover all your costs, but that includes typically an escrow account, which really isn't a cost.
No, it's your taxes and
escrows are
insurance,
taxes and insurance. So let's say you went with Bank of America and now you're going to come with us, right? You have to establish a new escrow account to pay for your taxes and insurance. Well, that's not really a cost because after you close on the new loan,
Correct.
you get a refund in the mail from your old escrow account. So if you have $2,000 in your old escrow account and it's going to cost $2,000 to establish a new one, I typically say, hey,
Bring that to the table.
bring that to the table. Your current payment's $2,000 anyways. We'll close April 1st. You won't have a payment until June 1st.
Yeah, 2 weeks later,
Right.
you'll get a check in the mail.
Whatever,
3
probably
weeks?
more
About
like
a month.
6
Yeah.
up to 60
4
days.
to 4 to
right?
6 weeks.
Whatever.
So they'll get the
Okay,
check in the
yeah.
mail and it's a free refi.
Right.
Really a free refi.
That's for the person that is really concerned about the balance that they owe, the loan amount going up at all. So that'll be able to.
There's a million reasons to refi.
Right.
Right. And sometimes it's like, hey, man, you're at 4%, but you have almost half of your mortgage in 26.99% credit card debt.
Right.
And you happen to have a lot of
Yes,
equity.
yes,
Right. So
yes.
we're going to take you from 3.875 to 4.5, but you're going to free up $600-700 a month of minimum payments on your credit cards, not to mention eliminate that debt.
Right.
So why don't you take that $600-700, add it to your payment that you've already been paying, and
Pay it out,
in
yeah, so
3-4
fast, yeah.
years you'll already be in a better spot.
Barry Habib talks about this a lot, and we're really debt managers when it comes to that point. What you have to do for the audience to understand this, if you took all your debt and you had maybe $25,000 in credit card debt at 11% interest, right, and your mortgage is at 4.25, if you add it all up, you're probably paying 4.3, 4. Like you can figure out what your actual effective interest rate on all your debt. But if you can minimize all that, pay it all down quicker, it's just a better place to have your money is with a mortgage if you can do it. That, to your point, though, there is a lot of reasons to refinance. And right now, I think people just like the hardest thing that we have to get over sometimes is when I call these guys, hey, man, we're going to do a free refi. Well, what's the catch? I know, man. It sounds like there's no catch. There's no catch. It's free, literally free money. And because you're not going backwards, like you just did it 8 months ago, you're not going back to if you were 4 or 5 years into it,
Right.
you'd look at doing a 24 or 25 year whatever mortgage.
And you can do any term between
any
what
term.
is it, 8 and 30 years. So
Yeah.
it's like, okay, you can do a 29-year mortgage if you don't want to start over.
Right.
Right.
That's like yesterday. I was looking at one that we just closed like 8 months ago, and we were able to drop their rate 0.25% for free. They're going to bring a payment to closing, right?
Yeah.
So they're going to make a payment anyway. So why not just make that payment to closing to cover your escrows, drop them 0.25%, and they're on a 29-year loan. So they actually gained 6 months.
Right.
The payment goes down. Like, how do you say
the
no to that?
reality is, like you said, it's not like they're in the 24th year or
Right.
or the 5th year of their mortgage where it's like, all right, you're starting to get into that equity position, right? Where when you make a payment,
Applying more to principal.
more is going to
versus
principal.
interest.
So, the reality is, okay, it's been a few months, right? We started at 4.5 and we're dropping you to 4 on a $500,000 loan.
It's a lot
right?
of money. Yeah.
Let's just do the it's a lot of money. And if your balance isn't going up and all you're bringing to the table is a payment or less, and then you start your new loan, I just like to know how you lose,
Yeah,
right?
you don't.
And there is some sunk cost, I guess, in the interest they paid in those 6 months.
but it's not really sunk cost because if you think about
They're
they still-
reducing a term on that, right?
Yeah.
It's just like they have a 30.5-year mortgage.
Look, you gotta do
which,
the math.
Again, no one's going to have their mortgage 30 years anyways, and if they
Right.
do,
If they do, they're going to end up
Sorry, God
saving.
bless you.
In that scenario, they're going to end up saving 6 figures. I mean,
But the bottom line, we're not going to put someone in a bad loan. We do the math and we make sure that it makes financial sense. We're not like that's the biggest thing. It's like even if you're saving $50 a month, that's $600 a year.
Yeah.
Right.
You know what
Always
I mean?
going to be a net tangible benefit.
I mean,
There has to be
by
within
law.
our business, right?
one
By
of-
law.
a good question to ask is, are you comfortable with your current payment? You know, well, yeah, it's fine.
All right, let's do it.
What if it went up
25
$100? You do a 20-year loan,
right.
right? Because rates have dropped.
year. Yeah.
You can re-amortize it. Yeah, I'll shave 10 years off, or 9.5 years off
For
my
$100
mortgage.
a month. It's a savings account for $100 and you pay less interest, so much less, like thousands of less interest, right?
Or you give them the flexibility. You say, make the same payment you're making now, but your new payment's actually going to be $100 less. Make
Right.
the same payment you make now. Stay stringent on that, unless you actually need to. You have the flexibility
Right.
of
Well,
if it
that's
gets
an
tight,
extra
you have extra money, right?
$1,200,
$1,200 a year.
$1,300, whatever, towards the principal.
Yeah. So I mean, just I guess the message, and I think Sal, you said it perfect. Like you should definitely look at it right now. I mean, if you did your mortgage a year ago, 6 months ago, you should. I mean, I wish I could refinance right now, but I can't because we started our company like a year ago, and we'll
Right.
talk about that because I want to talk about self-employed borrowers and why it's an issue a lot of times. So definitely look into it. Call your loan officer. Call a good mortgage company. Generally, brokers have better rates right now. So if you could go after a broker or a hybrid like us, like a independent.
If your mortgage company hasn't reached out to you in the last month,
Bro.
there's something wrong. You need to call us.
Everybody's reaching out. You know how many things I get in the
I'm
mail?
just saying,
Like
if they haven't reached out to you, there's a problem, and you should reach out to us, and we'll take care of you.
Well, most won't if you
yeah.
close within the past 6 months.
They don't
right?
wanna redo
So
it,
there's a
right.
recapture period
call
in
us.
which Fannie Mae essentially charges
Right.
lenders, banks, whatever commission was made. And it could be, hey, we made $2,000 on this deal, but we gave you an $8,000 credit.
we owe back $10,000.
We owe back 10.
So the audience understands if a deal that we wrote gets refinanced or sold within 6 months, is it?
And that could be that,
Pays off.
hey,
Pays
client
off,
got
yeah.
a new job, we're leaving.
Yeah,
Right?
it
We're
could
going
be
to
anything.
Arizona.
Could
All
be
right,
anything.
we still get charged back.
We got to pay them
It's
back
a
because they haven't.
non-performing note.
Exactly, exactly. So there are some stipulations, but people get recaptured all the time. you know
Yeah,
what I mean?
it
just-
happens, and
happens.
it's inevitable, right? Like if someone was to call me, I'd say, yeah, let's do a refi if you want to do a refi, or you can wait 30 days and
Right.
Yeah, just if you're within that 6 months, just make sure you call the people that actually did the loan for you, because if they do it, then they can actually
it
recoup.
could probably
or break
work the
even.
best deal for
Yeah,
you.
because they're going to want to make sure you get taken care of.
Right.
Let me ask you this: right now, there's a lot of we deal with a lot of first-time home buyers, Sal, and a lot of what we do is navigating the rules and regulations to make sure that we get people approved properly within the rules and regulations that we have. There's a lot of ways to approve someone, and you've got to be really smart sometimes to be able to do this stuff. One thing that I think is really interesting, and Sal, I want you to talk about this, is the debt-to-income ratio that people can get away with on a mortgage, and how high that is compared to what people might think sometimes. Like it is kind of crazy that on an FHA loan, 55% of your pre-tax money
57 sometimes.
can go to your debt.
Right.
Meaning that if you add up all your debt, your and it's only things on your credit report like credit cards, car loans, student loans, and stuff like that, and then you put in a mortgage on top of that. So let's say hypothetically someone's making $5,000 a month, Sal,
Before taxes.
before taxes, obviously. Talk to the audience about the calculation and how you look at that.
So typically, right, I mean, I guess off the bat when I'm talking to someone, hey, how are you paid? How much do you make? Blah, blah, blah. It's about $5,000 a month gross. Okay. Well, that means that all in with your debt, that your other debt, and that's minimum monthly payments. And I always get, no, I don't have any debt. Okay.
No, nobody has any debt ever.
Do you have a car?
Yes.
Yeah.
Yeah. Well, it's leased. Okay, that's a
Okay,
debt.
that's a
What's
debt.
the payment? $600 a month. Okay.
Yeah.
Great.
It's a nice car.
So at least in that situation, right? Let's say their car payment was $600 a month. That leaves us out of that $2,500, $1,900 that could be allocated if they had no other debt towards a house payment. So roughly speaking, that probably puts them at like a $260,000 home.
Almost
Right.
depending
But
on
we're-
taxes. Yeah.
We're talking about actual debt on a credit report, credit cards, loans, things like that, not utilities, not phone
Right.
bill, not cable. So that's,
And
all
that's
on top
right.
of it.
We don't calculate
55%
it.
of your pre-tax income.
It's pretty high.
That's, I mean,
I guarantee if you look at most first-time home buyer spending habits, right? The debt that is spent on the money that's spent on the minimum payments on the credit report is probably half of what the rest of the income is. People can't save. It's
Yeah.
kind of crazy, right? So okay, you make $5,000 a month, right? and that covers your bills, and you have an extra $1,000 left over after taxes, right? What, are you not going to live? Right? You got cable, you got utilities, you got
We
food.
have that conversation all the time.
It's kind of crazy. Hey, at the end of the month, you got $150 that you can put in your savings account.
Right. But I mean,
you're
a lot
gonna
of
blow it at a bar.
a lot of times though, it's a couple and only one of them's on the loan, so there's more income in the household, right? So
Well, to me, right, and I didn't make the rules, nor can I. I wish that could be factored in, and you can on a VA loan, for example. Like if you can show that the spouse is making X, that can be factored into some residual income calculations, things of that sort. But ultimately, it's pretty black and white as far as the rules go.
Yep.
Hey, hubby makes $200,000 a year, but his credit's crap, right? Well, you make 40, and they're trying to buy a $300,000 house. No go. Sorry, right? So,
how many calls do you get from buyers that are like, "Hey, man, I want to buy a house. I've got really good credit. I got a good job. Okay, well, how much do you have saved? I don't really have a lot saved.
a lot.
I got nothing.
A ton.
Yeah.
I mean, it's
Probably 9 out of 10 calls, I would guess.
No, it's not that high.
Well,
but
It's a
high.
lot. I feel like.
you
where they're
never
at
know,
in life, too,
right?
first
It
time
all
home
really
buyer.
depends on everyone's situation, and I would say that that's just a problem of our generation is the ability to save, and not because, well, one, because it's so easy to buy stuff, right?
Yeah.
Everyone around
Click of
you
a
is
mouse.
buying things on Amazon, this and that. The price of education, the price of cars. I mean, cars are crazy.
Yeah.
$50,000 for a new car, and it's like a, not even top of the line pickup truck.
Yeah.
Right? It's like, okay.
Yeah.
You
Cars
make-
have gotten expensive.
Right? And
yeah.
most people who are buying those trucks don't even make that in a year.
Right.
Right? The rule of thumb probably before was like you shouldn't buy a car that costs,
More than like
more than a third of your income, right?
Yeah.
Now it's like, well, for the most part, everyone's buying cars that are probably at or above,
Yeah.
you know.
I make $60K a year. You're driving a $45,000 car, right?
Yeah.
Yeah.
And it's, so
It's nice to have nice
there's that,
things.
but
hard
it's
not to.
difficult to save money in this.
So what do you say to that person?
Okay. Luckily, right, for a first-time home buyer, you really don't need to have too much,
3% is all you need.
3%.
Not even that in
and-
some cases.
Yeah,
The VAs
just
are 100,
depending,
yeah.
right?
USDA.
So ultimately for us, it's like, okay, how much, I got $2,000 or so, and you want to buy a $150,000 house. All right, perfect. Well, again, you need about $4,500 for your down payment, which is 3%. And depending on the deal, and it's going to be harder in a market where there's a lot of multiple offers, but if you find the right house, the seller can chip in $4,500. Take a little bit of a higher rate, whatever, we'll give you a credit.
Mm-hmm.
And it's a
just
done
did that.
deal. You're in for $4,500.
Yeah.
Which isn't too bad to get into a house. If you can't scrape that up, you should probably contemplate doing that. But ultimately, if you wanted to rent a house, you're going to scrape up close to that anyways.
Exactly.
Security
First and
deposit
last
plus
month's
first
rent,
month's
yeah.
rent. It's crazy.
And
So-
and the other side of it is you actually own a property that's going to appreciate. That's how people build wealth is buying houses. I just did a deal. So just so the audience understands, when you're talking about cash to close on a house, it's not just your down payment.
Right.
Right. You're going to have basically.
I would say if you're putting minimum down 3%, right, have 6 or 7% total.
Yeah.
Right? Because that will cover basically everything.
Depending on the loan size. but
And
yeah.
again, you might
Yeah.
be able to get concessions, have the seller chip in, whatever. But if you're serious about buying a house,
But you got to know the number and then work your way backwards
Yeah.
from that, right?
Right.
The number is this, guys, just so everybody understands. It's your down payment. You've got a year's worth of taxes because you've got to set up your escrow account and you've got to pay prorations back to the seller, roughly. It's just a rough number.
well, the most difficult
Can I
thing.
finish?
Yeah,
Yeah, we'll just finish and then you can go ahead.
my show. Go ahead, though.
So basically, it's a year's worth of taxes. You've got a year's worth of homeowners insurance. You've got to pay that up front. So that's $1,000, $1,200, and then you've got about $2,500 in closing
Yeah.
costs, right? So you got to add all that together and work yourself
Right.
backwards from that.
That's typically right. Well, how much are closing costs? Okay, how much are the taxes? $4,000, $3,800. Okay, $3,800, $1,000 for insurance, $2,500 there. Add another $500. You're looking at $8,000,
Prorations.
right? Well, that's including the year of taxes usually,
Yeah,
right?
yeah,
Between
yeah.
your and a lot of people, that's probably the most common asked question that I get.
Yeah.
Why am I paying a year of taxes up front
And I'm putting money in my
and a
escrow.
year of insurance and then paying it monthly, right?
Yeah.
So
It's a great because it feels like you're double paying it, right?
I'm double paying it. I already paid for a year, and now I'm paying it again. Well, the reality is when you pay that, it's not going to the city, it's not going to the county for your taxes, it's not going to the insurance company. You're building up a savings account,
Right.
so that in 12 months, because I mean, if you close today, March 28th,
Yeah.
right?
Wow, it's much
Hopefully,
Yep. You're right.
you're not making a payment until May 1st, right?
You skip it, yeah.
So in March 2020, you're going, March 2020,
Where are you,
man,
buddy?
it's just crazy.
Time machine,
yeah.
buddy.
So if March 2020, there's
That's
going
wild.
to be another $1,000 due, right? And you've only made 11 payments.
Yeah,
Or
because
10
where
payments or
we
whatever,
live, they're
right?
paid forward, right? So you pay your
Well, I'm just saying a good way to even think about it is just your insurance, right? And that's kind of the
Yeah,
same
that's a
way
great
it
way.
works with
You
everything
got to pay for the
else.
year's
Yeah.
premium at closing to make sure you're insured for that year, and then every month you're paying.
Yeah, you're
into
adding
it.
into that savings account.
So when it's time to renew, the lender can
The
disperse it
difficult
and pay
thing
it
to
again.
understand, I think, is the tax portion because there's 2 tax bills due, unless you live in St. Clair Shores, where you have to pay into that account, and it's going to hit at any given time, right? If you close enough, you actually just have to pay the bill.
And by the way, nationally, there's all different types of ways that people do their escrow accounts. Some are not paid in the like. There's just a lot of different ways.
Yeah.
So you just have to understand your market. I will tell you that the easiest way for me to explain it is: listen, if your taxes were coming due 4 months from now, you have to have enough money in that account to pay for it at 4 months from now.
Well, you're not going to make a payment for 2 months, so essentially they're going to collect almost a whole year in your escrow account,
Yep.
Yes.
right? And then you're going to be prorated because the seller already pays them, like you said, in advance.
You got to pay them back.
From the time that they're not there, you have to make that up for those taxes
Mm-hmm.
that they've already paid. You know, it's like a prorated rent.
Yeah.
almost.
And something that I always talk about to clients is the question is, Chad, always like, what are your closing costs? Well, listen, there's a definition there that we've got to talk about because the closing cost, the cost to actually do business for the mortgage is about title work, appraisals, recording fees. Those are about $2,500-$2,800, like somewhere in that range. Those are the actual costs, right? Depending on the area. But and again, they all change depending on the area. But there's other fees that you've got. There's money you got to come up with. Your taxes. Those aren't costs. Those are things you're going to pay regardless. Your insurance, those are things you're going to pay regardless. Per diem interest that you're going to accrue per day until you have your first payment. Those are things you're going to accrue regardless, right? So it's hard to sometimes explain that to the borrower and say these aren't actual costs. These are static across the board. What borrowers a lot of time they're comparing like the overall cash to close. The problem that we have in our industry that we find is that LOs will short the numbers up front to make them look all sexy. But that is such a big disservice. We actually go the opposite. We fluff everything,
yeah.
right?
Yeah.
We make them look worse.
When someone's comparing our loan estimate to someone else, man.
Why is the cash to close so
Chase
high?
is like $2,500 cheaper.
Well, they're
Well, yeah.
collecting 1 month for
You
taxes,
have a
insurance.
quarter of the year of taxes being collected up front. What do you think is going to happen when your tax bill is due in 3 months?
Or
which
when they
mind
finalize
you,
the
I
numbers
printed
and
it
get to
out.
closing.
is twice as much as they're collecting. Well, I don't know. That's what he said it is. I can
match
guarantee
it
you it's
right
not
now.
going to be that.
He's
So-
going to say something else in a month.
And sometimes people do say, well, you know what? I don't really care. I feel comfortable with the guy at Chase.
All right,
Okay.
bro.
And then I usually
bad.
get a call later,
Yeah.
and it's like, or I don't because they're too proud to call me. But I get it. Whatever.
Would you say that in our business, as black and white as people think it is a lot of times, there's so much gray because we don't know exactly.
I don't think there's a lot of truth in lending.
There it is.
And it's unfortunate that
that's a weird thing to say.
Right? With all these forms and everything else, all it's done is create a lot of ways to loophole around it and get it done, right?
Right.
And unfortunately, when you have someone behind a computer filling in the numbers, that's just what's going to happen,
Yeah.
right? Well, I want this to look good.
Yeah, because
I don't want them to not use me, right? And then that's how you burn your reputation.
Burn.
Right?
That's what you
Or
don't
end
care
up
about.
paying a ton to make it right at the end,
Yeah.
right? Oh, well, you told me this, man. Okay, I'll give you a credit. And you made $300 on the loan, which
And ruin
Happens.
your reputation at the
is how
same
we
time.
make our living.
Look,
so
at the end of the day, there hasn't been one deal that I've had in a long, long time where the cash to close didn't go down from when
Yeah.
we initially estimated because we purposely pad everything. We
Right.
purposely do it. Unless something pops up that we didn't know about, we purposely add extra because I want to freak you out a little bit and make you feel better at the end. Right?
you know,
Under promise, over deliver.
put yourself in those buyers' shoes who have
Yeah.
$4,500, right? I mean, they're buying their $150,000 home and they literally don't have any more money, right? And it's like, well, I got to make this work. So there's no reason to do that, even if someone's got $100,000 and they're putting down 3%, right? Well, it's money. It's their money that they're spending. You're spending their money for them essentially in their head, right? Like, we put away this much for that. So why would you set it up bad? But not to go too off topic, but kind of to your point earlier, when someone has a lot of money to put down, right, and it's all their money, like, hey, you know, I've got $20,000, $25,000 saved up that I've been saving up since I'm a kid for my house. Okay. Why would you put that all into the house?
Shouldn't.
Right? For your down payment.
They don't know any
At
better.
4%, right?
Because they've been told
that's the right thing to do.
20%
right?
down. I don't want to put
That's the
PMI,
responsible
but
thing to do.
that's the-
Everyone wants
people
to put
have been
down.
told
It looks
forever. Everybody thinks they've got to put 20% down sometimes, right? But here's the
It may
thing.
make sense to do 5 or 10, you know, to get a cheaper PMI rate or something
Yeah.
like that. But ultimately, like, have money aside after you buy a house, because that's
Shit happens.
the cheapest part about buying the house. If you put minimum down, is that
You're right.
right? And
Right.
then you're like, oh well, gotta get furniture.
Look, if you've got $300,000 in
paint.
the bank, if you have 300 G's in the bank and you want to put 100 towards the house, fine. But if you have
Sure.
50 and you put all 50 in the house, I'm like, dude, let's do 25. Keep 25 in your pocket. That way, and the price of money is so cheap. The difference in payments, $50 or what? No,
Yeah,
$120 bucks.
But you have 25,000 in the bank.
Right. How much would that 25,000 cost you if you put it on a credit card? Right. If they have to like go put furniture on a car, keep the money in your pocket. The price of money is cheap, bro.
Well,
right?
Totally.
especially too, you know, a house that's not already done up all the way. Well, you know, my parents said I should put 20% down, blah, blah, blah. It's like, put the minimum, and, you know, I could see that this house probably has some upside, and put the other 17,000 or whatever that your parents are going to give you into kitchen, tile, paint, whatever. And now you already have that 20% equity. You have 20% down. Your loan might not reflect it, but you can refi, right?
Yeah.
But
You know, it's funny. Like, what I think, and this is just to talk about you and your business. Part of the reason I think that you are successful, Sal, and that's a lot of things. But one of the things is you actually tell it how it is, and you tell clients what they need to know, not what they want to hear. And that's a tough thing to do in our business because most people just want to tell you what you want to hear, right? Oh, it's gonna be fine. It's gonna be okay. No. You got to be prepared, dude. This is a big transaction. So Sal, I've heard Sal say, "That's what it is, man. That's what it is. That's where it's at, and you can do whatever you want. You can go to Chase, whatever you want. You go to wherever it is. Ultimately, that's what it's going to be because those are static costs, right? Like you're just very upfront, and I think that's part of the reason why you have success.
yeah, well, I think you know, when someone's getting fed a line of bullshit, you kind of have to put that doubt in their head, right? Like, hey, you know, unless you're getting some type of credit, those are the costs.
Yeah.
Are you getting a credit? No.
Yeah.
Okay. That's wherever you go, down to the penny, that's what it's going to be. Tax prorations, right? Your insurance. Escrows, I can't see really being different, maybe a month or whatever, but again, that's not a cost.
Right. The county's like, oh, you're going with Chase? Oh, your taxes are $1,000 less this year.
And if my
That doesn't
escrows,
happen.
if my escrows are more, that means you'll probably won't get a letter in the mail. Right? For an escrow shortage, which is a whole nother debacle.
Yeah, so let's move on a little bit. Let's talk about the person that actually owns a property right now. They want to buy a new house. We're gonna get competitive, and non-contingent offers are gonna be a premium again, right? It's gonna give you a leverage. When I mean by non-contingent, where you are not contingent on the sale of your house. So if I'm living in a house right now and I want to buy this house and there's 15 offers, the offer that doesn't have a contingency saying that I have to sell my house to buy is going to win out on that. And I think that's we're headed towards that again. Now, one thing, there used to be bridge loans. There's not really bridge loans anymore because let's say you can qualify with both, but you have all this equity in this other house. You want to use that equity for the new house. What I've brought up in the past, and I think we've all talked about, is doing a recast once you sell the house. Can you talk to the audience about how that works and why that's an effective way to kind of get into the new house and then use the capital that you get from the old house and readjust all the numbers?
Yeah, so for a conventional loan, right, let's say you want to put your best foot forward as far as an offer goes. You want to put it non-contingent. You might even have your house for sale.
Yeah.
Right?
Yeah.
And it may end up closing and you get your equity and you can put down the 20% or whatever you want to do up front. But if you can qualify, let's say, with 3% and you have the other 20% or so in equity in your house. After you close, I think you have to make one payment. You can take that equity. Let's say you sold it 20 days after you closed on your new home. You could take that equity, contact the servicer, wire the money over after they send you a little agreement, and it will readjust the loan and recalculate the payments as if you put down the 20%.
Correct.
And the reality is right now, as far as rates go, sometimes the rates are better if you put down 5%.
Which is interesting. It's the truth.
Yeah, there's
it
like
is crazy.
incentives to put less down.
Yes, it's
right?
wild. So you might get 4.25, right? Mm-hmm. Well, you're going to keep that 4.25. Generally, in the past, you'd have to do a full refinance.
Or, hey, listen, pay a little bit of a premium and pay a little bit of points, right? Okay, buy it down. It costs you $1,500. But that's the reality of the position you're in. You don't have your house sold. And if you want this house and you want your rate, right, that might be what you have to do.
Yeah.
Or hold on and gamble the market and wait 6 months and do a refi.
But
right?
a lot of people don't know about this. Real estate agents don't even know
Yeah.
about this. And I think this is a good tool for agents to understand that, look, we can get you into a new house as long as you qualify.
Well, yeah, it really falls down on the education to the buyer, right? And making sure that they feel comfortable knowing that there's an option afterwards so they don't have this huge mortgage. I don't want that huge mortgage. I don't want to put $6,000 down on this house, right? The mortgage is huge.
Yeah.
We wanted a $100,000 mortgage.
Right.
Right?
But there's an out.
Yeah, you're going to get your 90 grand and you can put it down after and we'll recalculate and got a small payment. My dad did that and he's got a $100 mortgage payment.
Really?
Yeah.
Wow.
He paid it down to like 20 grand or something.
No
It's
way.
Like, okay.
All
Yeah.
right.
So it's doable. It's easy. It's not, it takes a little bit of time.
Loan
but nothing
officers
crazy,
don't
and
even
it's
know
worth
about
it.
this.
You can't do it over several months. So you can't like just pay an extra 10 grand a month for 6 months. That's not gonna work. It's gonna be a one-time large payment of at least.
I think you can
10,000.
do it unlimited times within 6 month periods.
No, but I'm saying you
Well,
have to.
not
It's got to
within,
be a
but
large
Right,
payment.
twice a year.
Like you can't
Well,
just say, I'm
10
going to pay an
Gs or
extra
more.
$5 grand.
10 Gs or
for
more.
6 months to get it
10
down.
Gs or more. And to your point, like I had someone say, well, what if I just put the lump sum payment and kept payment? They just want to keep their payment the same and just wanted to be more aggressive on
Sure.
the payment. You could do
Go
that
ahead.
too. But if you just pay extra on your mortgage, your payment doesn't go down on a 30-year, 15 under typical mortgage.
Still amortize over the original.
Right.
amount.
So your payments stay the same. What happens is you're shaving years off the back end. But if you want to have that lower payment up front, you just do a recast, dude, and it's so easy. It's like $75, I think it is, right? There is a fee to do it.
There's an app fee.
Depends
yeah,
on the
$75
service,
Yeah, but it's like call it $200, even if it was $200, which I don't think it is. It's such a good way. Look at it. Look at these fingers of fury over here. Look at just Sal's always just fingers of fury, dude. Sal is always working, dude. It's impressive. So I also want to talk about going on the difficulty of a self-employed borrower getting approved for a mortgage, which is counterintuitive sometimes. Like for I'll give you myself as an example, Sal. I want to get a mortgage from you. I started my business 11 months ago, right? I became self-employed 11 months ago. Before that, I was W-2 commission, which a commission has its own structural issues that you've got to make sure you've got to be able to abide by. But you have to, there's different rules for self-employed borrowers. It doesn't matter how much money you're making if you're self-employed. If you've only got 11 months into the business, you're not getting a mortgage, a typical mortgage, right?
Likely not, you
Right?
know, depending on your ownership percentage and things like that. So, yeah, it's difficult, and things might be going great, but the reality is you're 11 months into your business,
Yeah.
right? And nothing's guaranteed, and it ain't.
You got to look at it
It
like
ain't
this.
pretty, you know?
Fannie Mae looks at the percentages of businesses that fail, and it's like 50% of new businesses fail. They want to see a history of you doing well. And then on top of that, if you've been in the business for 5 years, but you write off everything, your tax guy is like, your adjusted gross is like $14, right? But dude, I made like $1 million last year. Well, that's not what you paid the government, and that's what we got to go by, right?
Yeah. I mean, again, we didn't make the rules, and there are options for self-employed people where, they can analyze bank statements, things of that sort to show the deposits. But in the end, you're going to probably end up paying a higher rate.
For sure.
Right? Which is difficult, and it does suck. But, if you're self-employed, I mean, kind of got to prove yourself. I mean, you should prove yourself to yourself before you buy a house. Right. And sometimes it sucks because it's like, well, I was W-2'd. Now I'm self-employed. I'm doing the same thing.
Yeah.
Right. Or I'm making immensely more money doing the same thing I was doing before. And I even showed the income to qualify on my tax return. But it's only been a year or 11 months or whatever. Well, sorry.
Yeah, but
I think
I mean,
that's
there's
such
a
a
case to be on
small
both
market
sides.
of people,
Yeah.
though, that
Yeah.
we're just going to lump it all together. You know,
There's a
everybody
case to be
falls
made on
into
both
this.
Yes, I mean they can't case by case basis, and that's.
Right.
However, the guy with the 57 DTI FHA who needs to go deposit $200 in his bank account before he closes,
Who had
will
a
get cleared by the
foreclosure
underwriter
5
on a
years
rush.
ago? Yeah, that
We'll
guy
get
gets a
that
loan.
home, the same loan that the self-employed guy wants that he can't get, and that's just some of the issues I think there are with the guidelines. But again, the amount of time and the amount of manpower it would take to probably discern everything on a case-by-case basis would be pretty tough. But
You'd
the,
write a
the
loan into
reality
a year.
is,
Yeah,
and the reality is now, especially I think any underwriter listening could agree, that they don't have any power, right?
these are the rules.
All they can do is
Yeah.
maybe find someone who can creatively structure an argument to FHA before the loan gets sold as to why this loan is okay, or we did this conservative calculation, but it's not above and beyond the limit of the guideline.
No,
right?
you're limited by the
You're
guidelines.
chained to the guidelines.
And by
And
the
that's-
way,
FHA just tightened their guidelines.
yeah,
too.
everybody did. I will tell you this: the value in a good loan officer is the ability. Look, if a loan goes perfect, which 14% of them go absolutely perfect. The value of a good loan officer is when there is an issue and having the acumen and the mindset to be able to work through the issue. There are many times where we think we have a perfect loan, and all of a sudden there was a foreclosure on their credit report that popped up because they got a divorce 10 years ago that we have to deal with. It didn't show up on the credit report. That happens.
Yeah, and I mean, I think it's the we'll figure it out mentality instead of the
Oh, shit.
I'm not.
which is
yeah.
okay. That's I mean, everyone's gonna say "oh shit" when they find it, but then it's okay. What are we gonna do, right?
Well, they
are we
usually
gonna
don't
figure
pick up
this
the
out, or are
phone.
we gonna kill this deal?
They
And
hide.
sometimes you have to kill the deal. Hey,
Sometimes
there is
you do, yeah.
nothing we can do.
And you
Gotta
got to
rip
do it
that
quick.
Band-Aid
If you
off.
can't do this, this, or this, there's nothing we can do. Well, we can maybe do this. All right, let's kind of look into that, look into this. You talk to other people. I mean, one thing that I think kind of made me successful is answer shopping. People hate it. People don't like to
Sal
hear.
doesn't take no right off the bat, dude.
No,
He's like, I'm gonna call.
If I don't hear
50
it from
people.
probably 3 people, I don't believe it.
But Sal,
Random people that didn't talk to each other.
Right.
Sal will get stuff done. Brad's really smart too. He used to be an underwriter, and Brad will be like, "Dude, there's no way you're getting that done." Sal's like, "I got it done, dude," and Brad hates it. Sal loves it. He's like, what
But I
mean?
respect the shit out of it. I hate answer shopping too when people come to me and they already asked 2 other people. But I tell you what, when I first started in this business, I answer shopped everything.
Yeah.
Everything.
You have to. I remember when I was
That's how you-
an account executive. You shop my answers. I'm not going to talk to you anymore. Fuck you.
Well, I got the right answer.
Yeah,
yeah,
right.
yeah.
Well, okay,
I'm-
I needed to find the answer.
growing
and
my knowledge
Your
base.
answer was wrong,
Yeah.
and I did it.
Adding
so
value to
of course, I'm
myself.
going to shop your answer. And sometimes told you I was right. Hey,
So let's talk about that.
I didn't take any more of your time shopping the answer. So, I think that's
And you were wrong in
And
the first place.
even as a borrower, right? If one
Yeah.
lender tells you no, you should get a second opinion. If one doctor tells you you have some disease or whatever, you should ask someone else,
Before you
right?
amputate your
Before,
leg.
yeah, for sure. And I think that's just what we call due diligence.
Yeah, for sure.
Yeah.
But it's also self-improvement from your perspective, right? You're bettering yourself. Growing your
And I
knowledge.
figure out the answers. And next time I see someone over there scratching their hair out of their head
Right.
because they're freaking out over a loan, it's like, hey, we can do this,
Calm
we can
down.
do that. It's going to be okay.
So let's talk about that. How did you get started in the business? Like where did you come from? And
Heaven.
And what got you into mortgages? And I mean, obviously you've had quite a bit of success in mortgages. So like, you didn't just come out of the womb knowing mortgages. So like, how did you get started?
No, I went to Western and wanted to do basically spreadsheets. I was like, all right,
Spreadsheets?
man, I want to be like a corporate financial analyst or something like that. Went, got my degree.
Wow.
And
don't see
You would have lost your mind, bro.
yeah, I don't know, but
It's
it was
essentially what he's
it
doing
was
now.
it was the pretty job for everyone in school, right? Well, what are you going? Well, corporate finance.
Do that
What is
that
corporate
cushy
finance?
desk job.
I didn't even really know, right? Until my friends did it, and they're like, "Fuck, dude, I crunch spreadsheets. I do this. We analyze." So essentially, that switched up into a job fair, and I went, and someone was there from Quicken, and hey, apply whatever. I applied and went and saw the office and was blown away. I was like, "This is awesome."
Yeah. Yeah.
My salary's $18,000, but whatever. There's upside, and went there and did that, and then hated it. Left. And I was like, fuck this. I never want to write a mortgage again. I did recruiting for a little bit, then A friend got me in at UWM and
United Wholesale Mortgage.
Yeah, United Wholesale, and I kind of learned the business from the back end, which was great. And
That's where I met Sal, by the way.
kind of gained the knowledge to become my own broker.
Yeah.
Right. So my cousin set me up with my own shop. I did that for a little bit, and then we went to another company, and then from there,
Yeah.
we all kind of decided to come together and do our own thing.
Yeah, just real quick, when the first time I saw
That's
Sal,
8 years of, nutshelled into half a minute.
first time I met Sal, I sat right next to him, and I pull up next to him, and I'm like, God, who's this guy, man? He's just, look at this chotch, which is funny because he was thinking the same thing about me, and
You look like the kid from Jumanji.
Yeah.
I was like,
yeah,
who is this guy?
yeah, you were a lot lighter back then
Quagmire.
too, buddy. So, but no, we ended up creating a really good friendship, man. And I realized something about Sal. Sal was a he had to know the answer. He didn't just want to be told the answer. He had to know the answer. So he would dig in, and he became a really good account executive for his people like us, our brokers, because he gave them the right answer. He prided himself on giving them the right answer, not just the fluff. Whereas I probably got away more with just fluffing people around. Like I was just like, I don't feel like dealing with it.
Well,
He went after it.
The value of having people around you is being able to bounce things off of them, things like that. So us, we don't, no offense, Rocky, we don't call our AE for answers.
We love
often.
Rocky,
We
but
do.
he's
We do
with us.
ask him questions and whatnot, but often within our four walls, we can find the answer out, right? Because we've all been through it or done it. So a lot of these brokers, especially like one-man shops, are like, I don't know.
Yeah.
They're calling their friends who may not know. So
Message
to have a good
boards.
AE, and again, like when we don't know something, we ask Rocky. He figures it out. He probably shops the answer himself and comes back and gives us
For
the answer.
sure he does.
Yeah.
Has to.
He gives us. Yeah.
He should.
He should.
Yeah.
Yeah. So we are at the point of the show where we are doing 3 questions, Sal. Then
They
you-
gotta be different ones though.
Yeah. Well, you want to do totally different?
Totally different. They can't
Totally
be. Yeah.
Okay.
So he's probably already answered it in his head a million times.
All right. Yeah. True. Okay. We'll start. If you could own one car today, what would it be and why?
Man, that's pretty tough.
Sal loves cars, by the way, people.
I don't know.
Cars, watches, and food.
If you could walk out of these doors right now and have one car waiting for you, what would it be?
That's tough. Like something I could drive daily, or just one car in general.
Just one car out these doors right now. What would it be? I'm going to repeat it again.
No, probably an
You should-
Aventador, man. It's just such
what?
a bad boy.
Aventador, really?
Yeah.
Sounds like a
Wow.
dinosaur.
Brad has no idea what you're talking
That
about.
sounds like
Alright.
a dinosaur, like
It's
a
a bad
pterodactyl.
boy, and
Can you explain
I
what it-
think that
can you
one day
explain
it's
what it
going to be
is?
like the only recently classic Lamborghini.
I mean,
You
yeah.
Just the design style, and it's big V12. It's just it's a monster.
Yeah, that's a pretty sick car. Okay.
Yeah.
All right.
If you were on death row,
Okay.
Whoa.
I mean, he loves death. He
Okay.
talked about it. So if you were on death row,
Jesus. Wow,
and
Jesus
you get to have,
Very
you
dark.
get to plan your last meal, right?
Mhm.
Anything you wanted, anything. What would it be?
Ooh. Sal loves food too, man. We're getting him
I
hard
feel like I know
questions.
the
Yeah.
answer to this.
Yeah.
Yeah.
We're getting him hard questions right now
Um,
because he loves food and he loves cars.
Yeah, these are tough ones.
Yeah.
I'd probably get a nice ribeye with like a Kona rub on it, shallot butter poured over it,
This is like porn.
a side
for
of
him.
lobster mac and cheese, and then a big plate of wings from the Rock on Third.
Yeah. Oh, those are.
By the way, the Rock
The
on
Rock
Third.
Shot of Jameson.
If nobody knows, it's such a good secret. Like Rock on Third has the best wings.
the best.
The
Wings.
best wings.
Yes,
The
Royal
hands down
Oak, they have the best wings.
Yeah.
Okay.
All right. Last question. If you could own a second home and have a second place of residence anywhere in the world, where would it be?
It's tough, It's nice to look at online or picture books or whatever, and picture books. But it's nice. Yeah, it's nice to look at things like that. But I've never been to a lot of those places, so I don't know. Judging from a place I've been, I think it'd be cool to have like a penthouse in Manhattan.
No,
I think that'd be fun.
Yeah, that'd be sick. That'd be sick. I am gonna ask you what scares you. I do want to know. Like we've
Spiders, man.
Oh yeah, fuck yeah,
Fucking
dude.
hate spiders.
Dude, Sal used to have a boat, and we would have to go.
Yeah.
And, like,
You used to have a boat. You sold it.
yeah. So we had to go and unroll
2 years ago.
the windows and pull them
Yeah,
off.
it's pretty
And,
tough stuff.
bro. There were like
Monsters.
hordes of spiders, and dude, I hate spiders probably almost as much as him, probably more than him, because I was screaming like a little.
No, he hates
schoolgirl.
them more. I kind of got used to him a little. I mean, listen,
I was
I
like,
could
bro.
see him. I can be within vicinity, but not arm's length. I don't like him. right?
Dude,
and I've been
Spiders are
sitting
cool
there
until
and
they're coming at you.
They've been
these things
crawling
were like
on
the
me.
size
I'm
of
not a big
my
fan.
hand, dude. They were horrible.
Spiders and ghosts.
You're scared of ghosts?
I mean,
Are you scared of the dark?
Not like real scary. No, but sometimes you're laying there in bed and like you expect to open your eyes and there's like
A dude?
a ghost in the corner or something like that. Like you get your mind thinking at night, right?
You watch scary
Probably
scary
not.
movies?
I mean, maybe after you watch a scary movie. I wouldn't say I'm afraid of ghosts. Like I think about a ghost in my house all the time, or believe in ghosts in my house. But I don't know, like things like that.
Yeah.
That'll freak you out.
So,
Do you believe in ghosts, Sal?
No,
you don't believe in them, but you're scared of them.
I mean,
Well, what the fuck?
I don't know. I mean, do you believe in aliens or crazy things like that? Probably not. However,
I would be afraid of getting abducted.
you would be afraid if you look through your window and an alien is watching you sleep. Like those thoughts.
Yeah.
But I think a lot when
Yeah.
I'm laying down and sleeping.
Yeah.
Whether it's that or loans or whatever.
Sal, this has been a good show. There's so much about mortgages that we could talk about. Your knowledge is really vast in this subject. You've done a really good job creating a name for yourself in the business. Kudos to you. I'm very proud to be your partner, dude.
Absolutely.
Yeah.
Thank you.
So that is our show today. Jessica, thank you for doing what you do.
My pleasure.
Yeah. I don't think your mic was on. Can you do that again?
Yeah, it was really low.
There we go. So obviously, you guys can find us anywhere, irepodcast.com, Facebook, Stitcher, Twitter, everywhere, right? No? Okay. Thank you, everyone. Have
I
a
don't think that's
wonderful
a thing.
day. We will see you next week. Hopefully, we added some value.
Okay.
Or had fun.
Side Real Estate, the nation's top real estate podcast.